Welcome to the Lending Forward podcast, brought to you by Atlantic Bay Mortgage Group. This is your home for real discussions about the mortgage and housing industry. Our hosts are here bringing you firsthand accounts every week from people at the heart of the business. And we're chatting with professionals from all corners of the industry as they help cultivate transparency around the future of the industry we love. Together, we are lending forward all we know to you. Thanks for joining us for today's episode. Let's dive in.
Well, welcome back to another episode of Lending Forward. I'm really excited about today's guest. We have Rob Chrisman with us today. If you're not familiar with Rob Chrisman, you might be living under a rock. Rob has been around forever. He has a blog. He's at every industry event I've been to. And Rob, we are so excited to have you. Welcome to Lending Forward.
Well, I'm glad to be here. Thank you for having me.
Now, you are all over the place, and I do want to talk about, what you're hearing. But before we do, for those people that may not know you, give us a little backstory on you. How did you get into this industry? I know you have a secondary background, but give us a little backstory on Rob Chrisman.
Backstory is I went to college and majored in food science. And I shouldn't laugh. I mean, heck, food science 3 times a day. That was a popular bumper sticker at college. But I went to work for Safeway in a milk plant and an ice cream plant and figured out it wasn't for me. And I was talking to my mom one day and she said, well, you should go back and get an MBA. And I said, what's an MBA? And she said, Master's of Business Administration. So I applied to Cal and got into UC Berkeley. And it's a 2-year program. And in between my first and second year, I didn't know what I was going to do. And so I saw this little snippet on the bulletin board that said California Mortgage Banking Internship Program. And so I scribbled down the number and called and applied and went to work that summer for a little mortgage bank in the Bay Area, and they kept me on part-time my second year at Cal and then hired me full-time right into secondary marketing. So that was probably before you were born. That was in 1985, 1986. And so I've been in it in one capacity or another that ever since, primarily in capital markets and secondary marketing, which to many loan officers and real estate agents and so forth is a little bit of a black box, but I think it's pretty easy to explain and somewhat intuitive. So that's my story. But in 2008, I was, my mom had passed away and I wanted to spend more time with my kids, and the market was a little bit rough. And so, and my mom died. I wanted to take care of my dad. So I basically retired from the day to day, but I kept sending out this commentary, which back then went to a couple hundred people. And it has grown ever since. And if anybody wants to sign up, if you don't mind me telling people how to sign up, sure, it's free. And there's a joke usually. It's www.robchrisman.com. Pretty easy. www.robchrisman.com. It takes about 60 seconds to sign up.
And it's awesome. I love the blog. I got into the industry in 2009, 2010. And that was one of the first things I was told to do was you have to get Rob's blog. It'll give you all kinds of information and you're going to learn the industry by reading Rob's blog. And I was like, okay.
Well, that's a nice compliment.
Question on the blog though, because it does always have a question. Do you come up with, or not a question, a joke? Where do you get the jokes from?
People send them in.
Oh, really?
Yeah, people send them in, and I keep a word file of the things that I think are funny, and some I can put in the commentary, and some I can't. But primarily, people send them in. It's they come from everywhere, and the most notorious or infamous source. I actually exchanged jokes with Steve Wozniak of Apple computer fame. So Steve, some of those jokes come from Steve, interestingly enough. But yeah, people send them in, and people like laughing. Mm-hmm. I learned that on a trading desk. I worked on a trading desk for many years, And even when the market was bad, if you could tell a joke, it wasn't as bad. So, a spoonful of sugar helps the medicine go down.
I love that. I love that. And I wasn't going to ask, but I am going to ask now because you did touch on just kind of secondary markets and how it is kind of a black hole. I know when I was going, to get my A&P, you have to take, the whole school mortgage banking too is on secondary markets, and it's confusing. So if you don't mind, for our listeners that are probably thinking the same thing I am, like, what the heck? Like, how does it work? What all goes into it? It can't be that difficult to make money right now. Dig into it a little bit. What all goes into capital markets? How are lenders making money right now?
So it is a very tough environment. And the way to think about secondary marketing in the capital markets is I always use an analogy of a car manufacturer. If you are Ford Motor Company or Tesla or Toyota, whoever, you are producing cars. And it might be the coolest car, it might be a wonderful car, whatever. But if no one is going to buy it when it's shipped off to the car lot, the company will lose money on it. There's no reason to manufacture a car that no one is going to buy. If Ford comes out with a Pinto, the famous Pinto, or Ford comes out with the Edsel, and there's no buyers for it, or it's too expensive, or it's poor quality, no one's going to buy it. The same thing happens with mortgage banks and banks. When originators are producing a loan, it has to meet certain quality standards. It has to have a certain interest rate that is attractive to investors. It has to be packaged in a way that there's a market for that loan. Otherwise, lenders, especially those who have independent mortgage banks with warehouse lines, there's no reason to produce it. And so that's in effect the capital markets, is what happens to that loan after lenders produce it. And typically, if you think about it, a mortgage is just like a little miniature bond that you might buy from the U.S. government, or your local school district sells bonds, or whatever it might be. Every month that borrower makes payments, that investor in that mortgage who bought that loan wants those monthly payments, and they want them on time and at the current market interest rate. And so the capital markets are what happens to that loan after it goes through the primary markets, the primary market being, the originator sitting there talking to the real estate agent, talking to the potential borrower, processing the loan, underwriting the loan, funding, and so on. That's the primary market. The secondary market is what happens afterward. Mm-hmm. And it is very tough to make money. You're not, one of the misconceptions that I think people have is that, they make a lot of money in secondary marketing. They're not paying us anything, or whatever, or their pricing is lousy and they're going to sell it at a big profit. Interestingly enough, the true role of a capital markets person is not to make any money whatsoever. Their job is to protect the company from movements in interest rate risk, mm-hmm. and make sure that there's a home for that loan once it is originated. And so it isn't a big source of income per se. There is income there, but it's not. You don't want your capital markets speculating on which way interest rates are going to go. Like, let's not sell loans today because I think rates are going to go down and prices are going to go up tomorrow because we get unemployment, or personal income and consumption or some economic release. Let's just hold off. No, the role of capital markets is a very disciplined approach to sell, hedge the pipeline, protect the companies from interest rate movements, and so on. It's kind of a boring job, but it's a very necessary job.
I love
Does
that.
that make any sense?
No, it does. It makes perfect sense. And I love the car analogy. I think that's such an easy way to kind of grasp how the secondary market works. I love it. Now, talking about, lenders and strategy, you're out, you're all over the place. Every time I look on LinkedIn, you're speaking somewhere or you're with somebody. What are you hearing? What are you seeing out there? What are lenders doing to protect their company right now?
So we came off of the sugar rush of 2020 and 2021 when there was a lot of volume and a lot of margin and loans were falling from the sky into 2023 where companies, we as an industry had refinanced millions and millions of borrowers. They all had 3% loans. They all have 3.5% loans. And so we did this great job in those years of helping millions of families. 2023, we went through 2023, times got tough. Interest rates went up. The Federal Reserve raised rates because inflation became a problem. So the Federal Reserve raised rates in order to slow things down a little bit. Inflation has indeed come down, but home purchases dropped. As interest rates went up, the refis went away. The rate and term refis went away. The cash out refis, there's still some out there, especially with credit card debt being 25 or 30%. It's an easy argument to help a borrower pay that stuff off with a 6 or 7% loan. But anyway, things really slowed down in 2023 and heading into 2024. So you have individuals who are looking at the industry thinking, okay, is this really a place that I want to be? It's really a tough grind. It's not so glamorous. You have companies looking at it thinking, all right, how many employees do we have? What was our retained earnings? What were our retained earnings from 2020 and 2021? What's our war chest like? What's our bank balance like? What do we need to do basically to stay afloat? Mm-hmm. And so some very difficult decisions had to be made throughout 2023 and heading into 2024. But the fact of the matter is, whether you believe the MBA and we're going to do $1.5 trillion or $2 trillion worth of loans this year, somebody has to do those loans, right? Somebody's got to be there to help people finance their home. And you see all these statistics, all these housing statistics and so forth. But it's important to remember that it's homes that we are dealing with. And I think originators know that. The internet may not know that and economists may not know that, but good originators and good real estate agents know that it's part economics, but also part psychological. Mm-hmm. And so even with higher interest rates, what I'm hearing originators talk about is payment. And rates are at 7 or 7.5 or 6.5, whatever rates are. But let's take a look at your payment and let's look at your rent and let's talk about the rent increases that you've seen lately and what school district you want your kids in and so forth. They know that it's an emotional thing and they are there to basically hold the hand in many cases of that person who's never bought a home before, never even looked for a home before. And so unlike the internet, individuals become very, very important in the whole equation. And real estate agents need subject matter experts in terms of the loan officers that they want to work with. Just like a client needs a subject matter expert when they go to a real estate agent. So it's a very people-to-people business, and we're continuing to see that as we enter 2024.
Yep. And I absolutely think it's going to be even more imperative to work closely with your real estate agents, with your loan officers, to really be that team to make sure that you are providing the value that first-time homeowner or maybe second or third-time homeowner needs. Now, you recently wrote an article, excuse me, that really kind of captured real estate agents and loan officers and how they should be working together, moving forward. And I really want to dive into it because we do have, both agents and loan officers that listen to this podcast. And I think you had some really, profound quotes and just insights in this article. And I want you to kind of dig into it. Did you interview just a ton of agents and kind of ask them what they want to see? Give me the backstory on how you got to this article.
Well, as 2023 went through, even before 2023, when you talk to loan officers, when you talk to originators, you say, where do you get your business from? Oh, referral sources. Okay, cool. Like what? Well, previous clients are a big source, but I also have real estate agents that I've known for years. I have builders that I work with. I have, divorce attorneys I work with. I mean, people have their sources of loans. Mm-hmm. And one of the sources, obviously, is the real estate agent. And granted, the National Association of Realtors had a verdict that came across in Halloween of 2023 that turned a lot of heads in terms of commissions and how those work. But regardless of how commissions work, the real estate agent is a key part of the selling of real estate and of buying of real estate. And people need that. And loan officers have their favorite real estate agents. And I always wondered, gee, what about looking at it from the real estate agent side of things? What do they look for from an originator? Now, not everybody can, not every real estate agent is going to be dealing with every loan officer, but I felt that it was important because the characteristics that a real estate agent would be looking for with a loan officer might apply to attorneys or builders or remodelers or whoever. And there were certain characteristics and traits, indeed, that real estate agents wanted to see among the originators that they worked with. Because if you think about it, that real estate agent's commission is based on, in many cases, that loan funding. Mm-hmm. Not everybody comes in with all cash, right? And so the real estate agent wants somebody that they can continue to rely on, that is professional, that has a business plan. The common characteristics and traits that I would see among the loan officers or among the real estate agents included being professional, mm-hmm. having a business plan, because whether you're dealing with 3 agents or 3 loan officers or 4 loan officers or lenders, there are slam dunk deals that come through the door. And so those might go to some company that only wants vanilla stuff, mm-hmm. and that always has the best price, but doesn't have great customer service. There might be another source that loan officers offer, or I should say real estate agents pursue, that maybe include the harder to do deals, more hand holding, first time home buyers and so forth, or somebody who's almost, a matronly loan officer who's very good at holding hands. Mm-hmm. And there might be a third category, like, oh my gosh, in the old days we would call it subprime, but that's a bad word now. But non-QM.
We'll bleep it out now.
Maybe that loan officer represents or has a great knowledge of down payment assistance programs or bond programs or non-QM programs or renovation loans or whatever it might be. So real estate agents and attorneys oftentimes over the years figure out who they like working with. And the real estate agent's commission is based on that loan funding. Right. So they don't want to turn it over to just, Hannah and Rob's mortgage person. Mm-hmm. They want that loan officer, that originator, to be able to prove to that agent, hey, I'm professional. I know what I'm talking about. Hey, I'd like 30 minutes of your time. I know you don't know me. I know, I don't know you, but I've heard your name. I've seen your name out there. Give me 30 minutes. I can tell you about our company. I can tell you about me and get to know that agent. And that agent appreciates, it's not like that loan officer is going to get every deal, but in order to present a professional appearance, to be knowledgeable, to be a subject matter expert to that real estate agent, so that when a client comes in the door and needs help, needs financing, the real estate agent thinks, all right, she knows her stuff.
Mm-hmm.
Let's give her a shot.
Mm-hmm. Yeah.
And also, it's important for loan originators to learn about the real estate agent's business. Good sales technique, right, is to ask questions, ask questions, ask questions. You want to know who you're dealing with when you're dealing with a new real estate agent or even an existing real estate agent. What areas do they specialize in? Do they only do single family homes? Do they only do properties near the coast? Do they, what neighborhoods do they? I mean, knowledge is very, very important.
Yeah. Yeah. So what I'm hearing are the days of, bringing in lunch and offering no value are gone. For the most part, agents are now very protective, which I get. And I think that, we always talk about from the loan officer side, we always talk about, it's not a transaction. It is a family. It is a home. You have to build that relationship. And I think that same mentality is turning into your relationship with your referral partners, right? So you can't just go in expecting business. You can't just go in with donuts. You have to go in with a vision, a plan, a roadmap to help that referral source, or in this case, agents. How are you providing value to get them to the closing table? And so I think it really is almost a mindset shift for a lot of loan officers out there that are just used to, business coming in, as they actually have to almost put together a plan.
You nailed it. Spot on.
Yeah. I did
session.
Somebody, it's somewhere in your article and I'm looking for it, but you did quote somebody who talked about they will never give a lead to a new loan officer, to someone they first start working with. And I just thought that was so interesting how, you do need to get to know your agents, because they are not going to test you out on their first deal. No. I just thought that was really interesting. And I like that because it is giving you that realistic perspective on, expectation versus reality.
Right. You're not, if you're getting ready to be married this upcoming weekend, you're not going to go to the barber college to have your hair done. You're going to want somebody that you've used before. And, if it's just any old thing, maybe you give the barber college a try. But you want some there when you're dealing. And especially if you're, like I said, if you're a real estate agent and your commission is based on this deal closing, mm-hmm. you want a trusted source.
Absolutely. So you interviewed a ton of agents. You've got some characteristics. Do you have a tip or a couple tips for the loan officers listening? How to become that trusted source? What would the agents like to see? As far as maybe an intro, you gave us a little bit of a quote for an introduction call, but almost like that intro meeting. How do we provide that value?
Right. So obviously the first challenge is to get in front of a real estate agent. But it's if you think about it, kind of do unto others as you would have done unto you. So it's in effect, what would you want to see if you were sitting across the table from yourself? Mm-hmm. You would want professionalism. Sure. Bring some Dunkin' Donuts or, Krispy Kremes or something to, break the ice a little bit. But hey, I know your time is valuable. I put together this packet of information, be able to talk about yourself, a few minutes of introductory about your background and how you got into the business. I mean, that's always interesting, whether you're a real estate agent or a loan officer. How'd you get in this business? Well, I was doing summer jobs and my cousin said, try this. I mean, it's always interesting, a little bit of backstory, but once again, to be professional and look nice. I mean, things that your mother would tell you to do, right? Like, look nice and shake hands and look them in the eye and have some kind of information, some kind of valuable information to say, okay, you know what? Here's our firm specialty, and here's what I like doing. And here's, a couple referrals, or here's a couple of my recent clients and their phone numbers. And please, I hope you have time to give them a shout, because, and these are the challenges that we had to overcome on my last loan. My client went out and bought a refrigerator the day before the loan was going to fund, whatever it is, so that real estate agent is sitting there saying, yeah, I remember I had a client once that bought a refrigerator. They can relate to that person sitting across the table from them. I think that's very important, and be very professional. Like I said, you don't want. I remember when I was first getting in this business, I went to a conference, and it was a SNL Savings and Loan Conference, and the owners were in a big exhibition hall, and we came up on this one table, and the owners of a savings and loan had these like beer can macrame hats on. I don't know if this is definitely before your time, but people used to cut beer cans in half, then punch holes in them, and then they make these hats out of them.
Oh my goodness.
And I thought, am I going to want to put my money with this couple with macrame beer can hats? The answer is no. You would want somebody in a coat and a tie, looking presentable. That's where you would want to put your money. And so, like I said, doing business the way your mom would approve, shake hands, send them a thank you note, send them, follow up phone call, or come away with a list of items. Just be organized. Things that, once again, that you would want to see sitting across the table from you if you're looking at starting a new business relationship.
I love that. Those are really good tips. Do business like your mom would want you to is probably the best. That might be the tagline for this podcast. That might be the title. I'm not sure yet.
My mom, everybody's parents have an impact on them. And, if I'm doing something wrong or I'm doing something, I could just wonder what my mom would say or my dad would say, like, oh, Robert, why are you doing that? So anyway, that's good or bad.
Oh my goodness. Well, Rob, we end every episode asking the same question. Looking into 2024, how do you plan to lend it forward to the industry?
I'm going to continue sending the commentary out.
It's good.
I think that people appreciate an unbiased source of news. That I rarely try to cram my opinion down other people's throats, because I genuinely respect and know that those people are better at doing what they do than I am. But if I give them the information and the tools that they can maybe help their borrowers with, it's a good thing. And it's been a recipe for success, and I'm just going to keep doing what I do.
I love it. I love the blog. It's always good. I love getting it first thing in the morning, giving it a quick read. There's always, the jokes are funny, but there is always a good little nugget or two in there. So for all the listeners, www.robchrisman.com, if that's what you said, right? And you can subscribe to the blog. Well, thank you so much, Rob. I really do appreciate you coming on. Don't be shocked if we have you on later this year too. I might have you as a repeat guest to talk all the things.
Absolutely. Happy to help.
Awesome. Thank you.
Thanks again for tuning into today's episode of the Lending Forward podcast. Be sure to subscribe to our channel, follow us on Instagram @LendingForward, on YouTube, and LinkedIn. Tune in next week for another new episode, and go lend something forward today. Atlantic Bay Mortgage Group, LLC, NMLS number 72043, NMLSconsumeraccess.org is an equal opportunity lender and employer, located at 600 Lynn Haven Parkway, Suite 100, Virginia Beach, Virginia, 23452.